Hello everyone. Welcome to the Stock Minds web channel. Micron Technology, Nasdaq MU, delivered a standout Q3 2025 earnings report that showcased explosive growth in both revenue and earnings, underscoring its role as a key beneficiary of surging AI and data center demand. With record quarterly revenue and substantial margin improvement, MU now presents a compelling combination of growth and value. In this video, we will dive into Micron Technology recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Micron Technology. Founded in 1978, Micron Technology has evolved into a global leader in memory and storage solutions. The Boise-headquartered company designs and manufactures DRAM, NAND, and emerging memory technologies like HBM, used across servers, personal computing, mobile, networking, automotive, and industrial sectors. With roots tracing back over 4 decades, Micron has grown through relentless R&D investment and strategic manufacturing expansion to meet the demands of data-intensive and AI-driven workloads. Micron financial performance. Micron Technology delivered a strong Q3 2025 financial performance, which ended in May 2025, reflecting a significant turnaround from the previous year. The company reported quarterly revenue of $9.3 billion, marking a 36.56% increase from $6.81 billion in Q3 2024. Earnings per share, EPS, surged to $1.68, up 460.17% from 30 cents in the same period last year, highlighting robust profitability improvement. On a trailing 12-month TTM basis, revenue reached $33.81 billion, representing a 58.22% growth from $21.37 billion a year ago. TTM EPS came in at $5.50, a substantial recovery from a loss of $1.40, while free cash flow per share rose to $1.66 from -$1.25, showing an impressive 232.8% year-over-year increase. Profitability metrics were also solid, with a gross profit margin of 37.13%, net profit margin of 18.41%, and free cash flow margin of 5.56%. While return on assets is 6.55% and return on equity is 13.11%. The company maintains a strong balance sheet with a low debt-to-equity ratio of 0.32, indicating financial discipline and operational resilience. Over the past 5 years, Micron has been growing its revenue at a 10.7% CAGR, net income at 20.5%, and free cash flow at 100.1%. Although Micron experienced a significant business decline in 2023, it has continued to grow and recover since then. Micron Fiscal 2025 and 2026 Financial Forecast. Looking forward, analysts forecast continued momentum. Revenue for fiscal year 2025 is projected at $35.53 billion, up 41.48% from $25.11 billion in 2024. While non-GAAP EPS is expected to jump to $7.01, a 439.57% increase from $1.30 in the previous year. For 2026, revenue is forecast to climb further to $45 billion, a 26.68% rise over 2025 estimates, and non-GAAP EPS is projected to reach $10.99, representing a 56.64% increase. Analysts give a strong buy rating on the stock, with an average price target of $138.56, giving a potential upside of 9.97% and a highest target of $172, suggesting a potential upside of 35.17%. These figures reflect growing analyst confidence in Micron's earnings power and long-term growth trajectory. MU stock price performance and valuation. At the time this video was created, Micron Technology's stock is currently priced at $127.25 per share, reflecting a 9.8% decline over the past year, an underperformance compared to the S&P 500's 11.4% gain in the same period. However, looking at the longer-term trend, Micron has delivered strong returns, with its stock rising 162.4% over the past 5 years, significantly outperforming the S&P 500's 102.3% increase. The company also provides a modest dividend yield of 0.36%, offering additional value to long-term shareholders. Despite the recent price dip, Micron remains attractively valued given its strong growth outlook and financial turnaround. The stock trades at a trailing 12-month price-to-sales PS ratio of 4.53, with a more favorable forward PS of 4.02. Its non-GAAP price-to-earnings PE ratio stands at 24.84 on a trailing basis and have forward PE of 18.22. Although the price-to-free cash flow PFCF ratio is currently elevated at 75.6, this is likely to improve as free cash flow increases with rising profitability. Based on Fiscal.ai data, if we look at the valuation since 2024, the forward PS is slightly above the average, while the forward PE is below the average. This suggests that Micron's stock may be undervalued as its future growth remains strong. Micron growth potential. Micron Technology growth potential remains robust, driven by several factors. 1. High bandwidth memory growth. Micron's high bandwidth memory (HBM) business represents the most significant growth driver, with revenue increasing approximately 50% sequentially in Q3 2025. The company now operates at a $6 billion annualized HBM run rate, accounting for approximately 15% of total revenue. HBM3E and HBM4 modules are completely sold out for 2025, with demand expected to significantly exceed overall DRAM growth in 2026. The HBM market is projected to experience explosive growth, expanding from $4 billion in 2023 to $35 billion in 2025, and reaching $130 billion by 2033. This represents a compound annual growth rate (CAGR) of 33% through 2030, compared to just 3% CAGR for conventional DRAM. Micron expects to achieve approximately 20 to 25% market share in HBM by the second half of 2025, matching its overall DRAM market share. 2. Data center dominance and AI infrastructure leadership. Data center revenue more than doubled year over year, reaching record levels driven by AI infrastructure build-out. The Compute and Networking Business Unit generated $5.1 billion in revenue, with nearly 50% sequential growth in HBM sales supporting this performance. Micron has established itself as a key supplier to major AI players including NVIDIA, AMD, and major hyperscalers. The company's strategic positioning in AI memory solutions is further reinforced by its HBM4 product launch, which begins volume production in 2026 and offers significantly higher bandwidth capabilities. Micron's exclusive position as the only company shipping low-power DRAM into data centers at high volume demonstrates its technological leadership and deep customer partnerships. 3. Robust financial outlook and investment strategy. Micron provided strong Q4 2025 guidance, with revenue projected at $10.7 billion, plus or minus $300 million, representing approximately 15% sequential growth. The company expects non-GAAP gross margins of 42% and adjusted earnings per share of $2.50 at the midpoint. This guidance significantly exceeds analyst expectations and demonstrates management's confidence in sustained momentum. The company announced a transformative $200 billion investment plan over the next 20-plus years, including $150 billion in manufacturing and $50 billion in research and development. This includes plans for 2 high-volume fabs in Idaho, up to 4 fabs in New York, and expansion in Virginia, positioning Micron to produce 40% of its DRAM manufacturing domestically. Risks to consider. While Micron's stock presents an investment opportunity, we should be mindful of potential risks. 1. Cyclicality and market fluctuations. Micron operates in the highly cyclical semiconductor memory market, where supply and demand frequently fluctuate. During oversupply periods, memory chip prices can drop sharply, significantly hurting profitability. This impact is amplified by Micron's high fixed costs and vertical integration, making the company vulnerable to market swings that cause volatile earnings and stock price movements. Understanding this cyclicality is key to assessing Micron's financial performance and investment risks. 2. Trade and geopolitical risks. About 25% of Micron's sales are exposed to China, making the company vulnerable to trade and geopolitical risks. In 2023, Chinese government restrictions eliminated roughly 10% of Micron's revenue from data center sales. With ongoing trade tensions, further bans on U.S.-produced memory chips in China could occur, potentially leading to significant revenue losses and impacting Micron's overall financial performance and growth prospects in this critical market. 3. Dependency on AI and data center demand. Micron's growth heavily depends on the rising demand for memory products used in AI and data centers. This sector presents significant growth opportunities as AI adoption expands globally. However, any slowdown or delays in AI and data center deployment could negatively affect Micron's sales and earnings. The company's financial performance is therefore closely tied to the pace at which these technologies are adopted and integrated across various industries. Conclusion: Micron Technology's Q3 2025 performance underscores a powerful growth story backed by strong financial recovery, expanding profitability, and accelerating demand across AI and data-centric markets. With revenue and EPS growing sharply year-over-year, rising free cash flow, solid margins, and prudent financial management, Micron is demonstrating both operational excellence and long-term potential. While risks like industry cyclicality and geopolitical tensions exist, the company's strategic positioning, innovation in high-performance memory like HBM, and ongoing capacity expansion make it a compelling investment opportunity. For investors seeking a blend of growth, value, and exposure to the booming AI and data infrastructure ecosystem, Micron Technology stands out as a stock worth serious consideration. But remember, this is not a financial advice. What do you think about Micron Technology? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.